What is the history of accounting? The accounting is a discipline in charge of measuring and analyzing the financial situation and assets of an individual, a nation or organization determined, whether the scope of the public or private, in order to shed relevant information to the work management and decision-making. It is a technical discipline to which accountants or accounting professionals are currently engaged, professions that only exist from the 19th century to the present day, despite the fact that accounting has a 1,000-year-old history. This is because the need to count assets, that is, to keep a record of them for a better economic organization, is as old as humanity. In fact, it is thought that it was one of the reasons for the invention of writing, which just took its first steps in Mesopotamia, Egypt and other geographies as a method of representing goods, livestock or people, through signs or drawings of the same. Lists of expenses, goods received and sold, and other similar documents of around 7,000 years old are still preserved. In addition, the rise of the great ancient empires supposed an accumulation of economic, productive, tax and commercial information that undoubtedly represented a challenge for administrators, given their volume of transactions. That is why it demanded the work of accountants of some kind, to keep a record of what there is, what is owed, what is negotiated, what is won, what is collected in taxes, and so on. The Roman Empire, for example, was notorious for its handling of financial information, but it was by no means the first to do so. The ancient Persians, the Phoenicians, the Assyrians, and the Sumerians already had a relative practice of accounting. On the other hand, the first texts on the art of accounting arose in the cultures in which mathematics was invented. During the Mauryan Empire, 320 to 185 BC, of India, for example, the Brahmin and writer Chanakya, c. 350 to 283 BC, wrote his work Arthashastra, in which he explains in detail how to keep books accountants of a sovereign state. Something similar was developed in the times of the Roman Emperor Augustus, 63 BC 14 AD, who listed and quantified the public spending of the empire, as evidenced in the Residential Gesti Divi Augusti, the exploits of the divine August. There, a record was kept of grants, costs to war veterans, offerings, temple constructions, and so on. That is just one example of the many accounting documents that survive from ancient Rome. Later, accounting gained importance in medieval Europe when a monetary economy began in the 13th century. In fact, at that time the double entry method was introduced, which records for each transaction an entry in debit, from the Latin debitar, debt, and another in credit, from the Latin credere, believe or trust. The pioneers in the use of this methodology were the Jewish bankers of the Middle East, although they soon moved to Renaissance Italy, seat of the commercial bourgeoisie, and the first book that collects this accounting method is the Ledger of Ferralfi, 1299 to 1300, from Giovanni Ferralfi and Company, a Florentine company based in Nîmes, France. Two other important books for the standardization of accounting at that time were the Treatise della Mercatura e del Mercante Perfetto, on the merchandise and the perfect merchant, by Benedetto Cotrugli, 1416 to 1469, Italian merchant and economist, published in 1573 for the first time in Venice. Summa de Arithmetica, Geometria, Proportioni et Proportionalita, Revision of Arithmetic, Geometry, Proportions and Proportionality, by the Franciscan friar Luca Pacioli, circa 1445 to 1517, which appeared in 1494 and soon became a reference book for the merchants of the moment. The advent of modernity and capitalist thinking created an even greater need for professional accounting. For example, from 1600 the rise of joint stock companies required new accounting information systems, which led to their division into two aspects: accounting for internal purposes, for administration, and accounting for external purposes, for financial purposes. But modern accounting, as it is understood today, is a product of the professionalization of the trade in the 19th century, especially in Scotland, where it managed to separate itself from the legal profession. Thus, in 1854, the Glasgow Institute of Accountants petitioned Queen Victoria for a royal charter, requesting the formalization of the accounting profession as one of tradition and respect, whose professionals came to be considered public accountants. Shortly after, the first colleges for chartered accountants emerged in Wales and England in the late 19th century. With London being the financial centre of the world during the Industrial Revolution, British accounting considerations soon became international norm and resonated with other nations. In the United States, for example, the first American Institute of Certified Public Accountants was established in 1887.